What I always say is the job of a lawyer is to worry about everything going wrong. I was taught to draft documents and this is how I think lawyers draft documents, is if in 3 weeks after signing the documents, every single one of the partners hate each other. And so you have to figure out a way out. And that's what the operating agreement is. It's your roadmap for doing it.
Coming to you weekly from the OnPay recording studio, this is the Cloud Accounting Podcast.
Hello, and welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
And we are live with Matt Foreman. Welcome to the show, Matt.
Hello. I'm glad to be here.
Matt, I'm so excited to have you here because it's the week of the Silicon Valley Bank collapse. I know you've got to have opinions on that because you have so many opinions about everything, and I want to hear what you think about that. I haven't really been able to prepare. It's been a crazy week for us, and so I know you'll help us fill all the time with everything you want to talk about. And I'm glad you speak up and you speak your mind. It is March Madness. You got a team in this bracket?
Yes and no. I went to Penn State for law school, so I guess the answer is Penn State. SUNY Albany didn't make it. They had a good run maybe 10 years ago where they made it a couple times, and they made it to about 5. They were down by 2 or 3 to number 1 or number 2 seeded UConn when I was first year in law school. I think it was first year law school. And then UConn realized what was happening and kind of blew them out. So no, not really, not that strong. So,
all right. Well, you're still watching it though. That's what you were doing right before we got on. I see Michael is in the audience. Michael, thanks for joining us. He says, "I think we're seeing each other too often, guys." Smiley face. No, we can't see each other too often, Michael. Like David said, we're becoming professional Twitch streamers. We haven't yet put the Cloud Accounting Podcast.
We're not doing 2 hours today, though. That was last week. 2 hours is a lot.
It is a lot. That was on Monday, David, wasn't it? Or no, that was last week. You're right.
Oh, and then we did Monday again. I forgot. Yeah, we did another stream on Monday. Yeah.
Well, Matt, it's great to see you on the YouTube stream here. Is that the Empire State Building right behind you?
That is the Empire State Building.
Wow.
The big building you see right here, I'm kind of turned around a bit. That's the Times Square Hilton, which is much less exciting and much less notable.
Mm-hmm.
If you were to look out the window that way, which you have to walk up here and look over, you can see 30 Rock. I see a building with a Thomson Reuters logo on it, which I know everyone super loves them these days. So that's fun. Hopefully that they don't sponsor it or anything like that.
No, I think in order to sponsor the Cloud Accounting Podcast, you actually have to have like a real cloud product. Is that a requirement, David? Or will we take anyone's money?
At this pick, we'll take anybody's money. Depends on what bank it's coming from, but we'll take it if it makes it.
We've got another viewer here. Cordis Tax and Advisory says, "Do not show the TR building."
I'd have to move my camera too much, but yeah.
Christopher says, "Beautiful day in NYC."
It is. It's actually in the mid 50s today. So it's probably 55 or so out, which. Blake lives in Arizona, so he's not that impressed by mid 50s, but it's a wet 50, so it feels much warmer as opposed to a dry 50.
Oh, yeah.
But, spring and fall in New York, there's nothing better.
My brother is a public school teacher in Manhattan, and so I try and go up and visit him at least once a year, and I just love being in the city. I would live in New York. I would be a New Yorker if I could. I say that. I know a lot of people move there, and then they realize they can't hack it, and they leave. But I feel like I would enjoy it a lot.
It's a speed that's tough at times. It's an intensity that's tough at times that I think are tough. It's also, it's expensive to live here, which is another issue. But I love the speed of things. I love having everything around. I love Central Park. I love museums. So
it is expensive, but Matt, you are a tax attorney. And so I imagine that is a pretty decent living and allows you to enjoy the city. I would love actually to learn from you and on behalf of our listeners, what is it exactly that a tax attorney does? David was asking me before we got on. He said, "Is Matt a CPA?" I said, "No, he's not. Right? He's a lawyer."
Right.
That's right?
Correct.
Okay. And so, how did you get into tax then? Because a lot of people get into tax through the accounting side of things, but you got into it through law.
Yeah. So I was finance undergrad. I, like most 18, 19, 20-year-olds, had no idea what I want to do with my life. I'm still not. I joke that I don't know what I want to do when I grow up, but didn't know what to do, and sort of made an offhand comment once. This is an awful thing to admit to my mom, that I was thinking about going to law school, and she's like, "Oh, we'll pay for like a LSAT prep course." And so I was like, this is great. It'll get my parents off my back for a couple of months about a job after graduation. So I took the LSAT prep course. I took the LSATs on my 21st birthday, which don't recommend doing. Really was not fun. I mean, the night was fun, the day was not. And went to law school. And my law school at the time required everyone to take tax your first semester, fall semester of second year. And so I took basic federal income tax, which is more or less a 1040 class. And I enjoyed it. I thought it was interesting. It was the first class I took that I thought was actually trying to solve a problem, and the rules made any sense whatsoever. A lot of first year, you learn about, I mean, in torts, I will get to this in a second, but some of the big cases are from the 20s or the 17th century, and they don't apply today. Tax is very now. It's very rational, even though it sort of does things wrong. And I enjoyed it. And one of my really good friends who was very highly ranked in our class was complaining one day. We're having lunch, a bunch of people were on a table, and he was just complaining how much he hated this class. And in my head, I'm like, what is he talking about? This is the first class that's ever made any sense whatsoever. So I thought, like, well, one, I clearly enjoy it more than most people because everyone else is agreeing with him, not me. Two, there are jobs in tax, which is good. And three, I grew up in upstate New York. I mostly lived in the Albany area. I always wanted to move to New York City. And I knew not only were there jobs in New York, but there are jobs in New York City. That's the epicenter for tax law, for a lot of financial services and legal professions. So I was like, this might work. So I just kept taking tax classes. Is basically the crux of it. So I came in very differently. Being a finance major, I took a lot of accounting. So for whatever reason, it's been helpful. Now I do a lot of work in subchapter K, but partnership tax was probably the class that made the most sense to me in entirety, which people always look at me very strange, but a lot of areas of partnership tax just kind of click for whatever reason and how they're structured. So I graduated, took the bar. Most states, there is no, you can't call yourself a tax lawyer or tax attorney. There's no requirement, right? You can theoretically, once you're licensed, you're a tax attorney. A couple states have, you can certify yourself in tax law. I don't know if that's necessary. What the bulk of the lawyers have in most larger markets is an LLM, which is a master's of tax law, which I have. It's the diploma's right there on my wall. And my wife told me to get it out of the house, so I brought it into the office.
So that's on top of law school?
Yeah, so undergrad 4 years, law school 3 years, and then LLM's is a fourth year. A lot of people do it part-time, so it'll take you 3 years, usually 3 or 4 years to get through basically 1, 2, or 3 credit class at a time. I took a year off and did it full-time at NYU, which has a great program for it. And really, it allowed me to reset my career. I spent my time in Big Four before predominantly. And since then, I went on my own for about 4.5 years. And now I'm at a firm, CSG Law, that's about 180 attorneys based out of, it used to be West Orange, now it's Roseland, New Jersey, with obviously a New York City office. I'm resident here in New York. I don't really go to New Jersey very much. Their tax rates are just way too high. So, try to stay out of New Jersey. But, that's it. And that, the long-winded story of, I fell into tax. I don't think I'm atypical in that regard. I don't think a lot of people wake up when they're 50 and go, boy, I really want to work in tax. But, it's a good job. It's perpetually interesting and it's ever changing. And the role of a tax lawyer is really, I think it's interesting. What my day to day is I don't have a consistent day. If you were to ask me what I do over the course of a 2-week period, it's pretty consistent. But every day is different challenges, different clients, different issues.
So let's get just a little specific on that. So I come in to hire you. I'm a client. What are you doing for me? Like, what problems of mine that I have, me being a typical client, are you solving for me?
Yeah, that's a good question. So, I break my work into sort of 3 areas. There's always a fourth of there's just really random stuff that pops up that's sort of hard to categorize. But the bulk of it is what's called tax planning. A lot of what, I don't do estate and gift work. Trust and estates, estate and gift, same thing. So a lot of what I'm doing is business structuring. It's bordering into estate planning type work, but it's one entity selection, how, an operating agreement for an LLC or a partnership comes together, issues that come along with corporate, or, just kind of legal research. Should I be charging sales tax? Ever since, Wayfair was decided, almost 5, maybe 6 years now, I think it's 5 years now, those kinds of core questions that come up, that's what that's what I do. A lot of it's state and local. And it's, how to allocate income between a business that sells into 32 states and sells into countries and has 14 employees in 11 different states. And how do you deal with the fact that you have income in a variety of different places, which is really always interesting.
I was just on a call this morning with a guy from Avalara who runs their transfer pricing tool. And, talking about how they've like processized the transfer pricing and, you can buy this as a firm and, basically create the deliverable for your client with that kind of software. Is that what we're talking about?
To an extent, I don't do the economic research because transfer pricing at its core is very economic. What I do is help people first off, sometimes people say like, I just want to make sure that I'm getting it right, that I'm not missing anything. And that's part of the conversation. Some people come because they're like, geez, I've hired 14 people in all these states, or I'm taking on all these investors. And I just don't know what are the tax consequences? Do I have to pay tax because I'm selling part of my LLC? Do I have to do this? And how is that worth it? And, making sure a big part of what I do are, non-pro rata allocation distributions within LLCs. So someone has a preferred return, someone gets a kicker at the end and things like that. And just making sure the operating agreement works properly. And, over the past 8 years, there have been a lot of changes to a lot of areas of tax law, from like the partnership representative to just 199A, right? How compensation and how you split between wages versus other things can just change how the tax works, and making sure it's done right. A big part of it, and it's a second area I kind of get into, is M&A, is from the buyer side, is looking at where the seller has gone wrong. And that's not to dig on anyone, but I don't think it's possible to get everything right. I just don't. We're human, right? We're going to make mistakes. No one thinks that things the same way. Go ahead, Blake.
So speaking of that, what is the biggest mistake that you see businesses make that come across your desk?
Sales tax.
What's that?
100%.
Sales tax?
Sales tax. Whether it's taxable, where they need to collect sales tax. It is, I'm not trying to dig on Avalara or any of those, but I don't think it's possible to develop a software application that can both encompass all of the areas that are taxed and do it accurately, and do it in a way that's somewhat helpful and easy to use, right? Because if you run a business, you want to have 30 categories, right? But states do things so differently, right? They do things in very different ways. One of my favorite examples is that, in New York State, right, Pilates and yoga are taxed differently for sales tax purposes, right? One of them's taxable, one of them is not. I would tell you which one, but I at the moment I'm blanking. I'm pretty sure that yoga is taxable and Pilates are not. Someone, if you want to correct me, go ahead. That's fine. But there's a pronouncement on that. There's a pronouncement on whether a hot dog is a sandwich, because a sandwich is taxable for New York State purposes because of the bread, prepared sandwich. So whether a hot dog is a sandwich, actually something the New York State Department of Taxation and Finance has felt it was necessary to issue guidance on, right? And that's New York. And those are things you think about. And then you think about like a product where it's part service, part product, right? They're selling some data, there's some consulting in it, but you can't pull them apart. It's one thing, it's all part and parcel. How do you deal with that? States deal with it differently. And they don't get it right. And sometimes they sort of choose not to comply.
Well, I imagine when a business is smaller, like the cost of compliance with sales tax to do it 100% is impossible, right? So you're basically in a regulatory regime where you have to simply pick and choose, right? How well you comply. That's what I've heard from firm owners anyway, who advise their clients on this. They'll say, look, you may have nexus and a liability in all these states, but filing might cost you more than the actual sales tax you're collecting and the fines you might experience. And so but then it becomes an issue when they get big, right? So I imagine that a lot of times these issues come across your desk as cases or matters when it's a lot of money at stake at this point.
Correct. And there's a lot of, yes, absolutely. The issue is, right, so let's say, if you're doing $1 million in sales, a rough approximation, about 7% is the normal sales tax rate. It varies. King County, Seattle's over 10. There's a couple states that are in the 4s. So the rate can vary pretty significantly. But if you think about a 7% rate, $1 million is about $75,000. What the business has to do is they have to determine whether it's taxable, right? They have to determine whether it's taxable in that state, whether they have nexus in the state. Then they have to figure out the right tax rate. A lot of states, like, for example, Some states have flat tax rates. This is the rate for the whole state. You take like a New York State, which is pretty typical, is there's a state rate, which is, I believe, 4.25, 4.5. There's a county rate, and then there's a locality rate,
Yeah.
city, whatever. So you have all these rates. New York City is 8.875%. It's not even an actual penny. It's to the 10th of a penny. So if you sell something for $1, like, is that worth? There's a point. And then you have to account for it. You have to put it in your bank account. I recommend a separate account so you don't spend it or whatever. Then you have to file a return, which is if your sales hit a certain point, is monthly. So you're doing monthly returns in 30 states, and then an annual at the end of the year, you're remitting. You could spend $50,000 on that for $75,000 worth of tax. Is that, there's a practicality that I thought the court really, the dissent in Wayfair tried to bring that up. The majority said, no, technology will take care of it. And we're 5 years later with a whole lot of money at stake. And, it hasn't gotten there. And I don't think it will. I don't think small ones will ever want to. So I deal with that both on companies looking to sell themselves or take on investment. They need to clean it up. And when they come in, a lot of times there's, money withheld in escrow, and we do it. And then we talk about, with M&A work, indemnification, representations, warranties, saying we're doing everything right. If we're not, if something comes up, if there's audits happen, right, then that's done right. So a lot of that in that area, I do drafting for tax, purchase agreements and things like that. And then the last area I do is litigation and controversy, which goes into, my love for funding the IRS, which is a big frustration, I think, with every practitioner who does it at all, is that they're underfunded government agencies. And so the auditor is working on too much, and they don't have people who can be that technical expert. A lot of times, the way I think about myself is, right, I'll say I don't know how to do a return. That's not totally true. But is the IRS underfunded? Yes. It is. Anyone who says it's not is lying to you or just beyond uninformed. But
well, now with this $80 billion, right, there's the possibility that they won't be. But so far, they've delayed, now again, the upgrade of their computer systems. And that's what I was hoping they would spend some of the money on, is upgrading that mainframe.
Well, first off, the fact that you still use COBOL, which has been a dead language. I learned COBOL in high school, and COBOL was a dead language when I took it in high school. Yeah. And I'm not just out of high school. So, that's an issue. What I tell people is, if the government were properly funded, audits would be a lot easier. You wouldn't need to hire experts as much. And what they need is both more auditors who have a lighter caseload, because I think they're just overloaded for it, and more technical expertise. They need people who come in and do what I do for my clients, which is I'm the technical expert. I'm the one who says, you have this long to respond. Here's how the issue works. Here's the memo on the issue based on the specific facts. Because the government, right, the IRS and states are so underfunded, they have the auditor doing that with limited limited time to really do the research, because they have to move audits along. And so what happens, and this is something I've had conversations with some fairly high-level people at the IRS and New York State, which is my frustration, that I feel like the auditors don't have the time to properly look at things and analyze it. They're just trying to move it along. And so they'll just take a position that may or may not be correct and say, you litigate it, you appeal it. I don't care. It has to get off my desk within this amount of time. I don't have enough time. And that's not good for anyone. It's not a good use of government resources, and it's not a good use for taxpayers to, pay. I get it. They're paying fees, and that's, how law firms and accounting firms make money. But at the end of the day, that's not an efficient way to do it. I'd rather spend my time doing deal work, doing planning, than doing, audit support and things like that. I just find it.
So what you're saying, Matt, is that because the government's understaffed, instead of actually getting the reduction order and making a proper decision about a small business violation or whatever it might be, there's it might not be correct. Let's just file the paperwork and let them defend it, and the conclusion will come out correct or incorrect then. Because really, for them, there's no loss, right? If nobody's going to be criticized if I brought up 12 cases and I lost every one of them and the citizens won, right? They're just going to move on, right? That's not like they're getting reviewed for that.
I think there is some level of review for that if you're taking positions and you're consistently getting smoked, that there is pause. There was a very recent case in New York State. If anyone's ever dealt with New York State residency audits, it's a unique one for New York because of how they do it and how they view it. But there was a very large case called OBUS, which dealt with OBUS, which dealt with, domiciliary of New Jersey, worked in New York City, and he had a house up north of Saratoga, which, if you're not familiar with New York, takes you, I don't know, it's probably about 180 to 200 miles north, straight up the New York State Thruway. And he had a house that he was there about 2 weeks. And according to how New York State interpreted the law, that made him a resident of New York State, which meant all of his income was taxed in New York, not just the New York source income. And the attorney who litigated it, I know very well, and it was a very significant victory. A, because the money was large, but also what it did was it carved out what New York State was trying to do. And I suspect that when there are larger cases or more important cases, I know there are, they internally review, how do we audit? Where did we go wrong? Do we need guidance? Do our procedures need to be updated? But the bulk of the cases are just like, do they have sufficient substantiation to show the value of the assets that they sold as part of an asset purchase agreement, right? And that's a good question. I'll get to that in a second. That is a good question. So that's where I think they do. There is evaluation, there is review, but the bulk of them are smaller issues, or they're so fact specific that it's hard to create a global problem. And I think just having a better funded agency would accomplish a lot of that, because I think they'd be more willing to A, guide pro se taxpayers who don't have representation, which is, I think, very important, and B, they'd be more willing to work with you and get to reasonable things, whereas they don't have the 30 hours to dig through the data like you did to review it. So a lot of times in appeals, I clear things up. What do you want to?
Yeah, well, you want to jump on this question, and then I want to talk about funding, but
yeah.
Okay.
So we got a question from Specialty Bookkeepers. At what point are clients meeting with Matt? At startup, quarterly, annually, upon notice? Essentially, how frequently should they budget to meet with their tax attorney to ensure they're compliant?
Every day, every single day.
How much can they afford?
Yeah. I think at formation, it's really important. And I think it's really important for the same reason that I tell people to get a lawyer to put your documents. I've read far too many operating agreements that talk about Delaware and New Jersey when the business is in New York, right? It's not in New Jersey. It's not another state. It's not that. And so you need documents that make sense. And look, if you're a solo person, you don't need super exhaustive documents. But if you have 3 partners, right? What I always say is the job of a lawyer is to worry about everything going wrong, right? And the way I was taught to draft documents and this is how I think lawyers draft documents, is if in 3 weeks after signing the documents, every single one of the partners hate each other. And so you have to figure out a way out. And that's what the operating agreement is. It's your roadmap for doing it. People talk about how a DAO is computer language. It's code, right? So it does it. An operating agreement and is really a computer code. What issue are you looking for? Go to this page, read what it says. That helps you make the decision. How do you vote? Who makes decisions? So the way I say is, I think at formation is really important. I think anytime your sales start really going above a point, right? You're doing 100, 200,000. It's fairly consistent. You're not seeing huge growth. I'm not that worried about that business because it's not changing. You're starting to see hockey stick growth. You're taking on investors. You're giving equity to people who work in the company. Let's have that conversation. And the conversation may be half an hour. And I say, well, there's really nothing. These are what you watch out for. This is fine. Or the conversation may be, you need a new operating agreement. We need to change some things. We need to change how you operate. So, I'm the lawyer saying it depends, but the answer is, at formation and anytime there's a significant change. And what does significant mean? I think that depends on the business. And that's something you have to talk to, whether, with a bookkeeper or accountant, whoever your advisor is, that's really where I look at it.
So just to jump over on the IRS funding, because you feel strongly about it, Blake and I have talked about this on the podcast before, but there's $80 billion. Like how is anybody going to agree to spend that $80 billion if people are fighting over? So part of the Inflation Reduction Act, they squeezed in that little $15 million blurb for the IRS to fund an independent study, right, about setting up their own e-file system. The Fed file, Fed free, would compete with TurboTax and H&R Block and all that. And apparently they're already arguing, the GOP is arguing that the study called New America is stacked with people that are already biased in favor of the free tax system. So both sides are arguing about how to spend $15 million. How's this $80 billion ever going to get spent properly?
Well, since it's going to be all new government agents with guns, I think that'll go pretty quickly, right? Yes, I would say yes. IRS agents some have guns. It is like less than 1%, and they're the same ones who, whenever you hear about financial crimes happening and they raid someone's office and take their computers, the IRS goes along with a gun because that's who executes search warrants, right? The answer is the bulk of the money is not for things like that. First off, I think the government should be doing a free file function. They already largely have it. If you make less than $74,000 a year, I think that's the amount for 22. It's at least 68. You can go to the IRS and through their website, you can file federal and state for free. You go through a tool, it gives you the ones you can use and you can use it. So the notion that the IRS isn't already doing that, it kind of is. And it's all the same tax preparers that there are. And so I think the IRS should try to do it. First off, I think it should be done concomitantly with the general upgrade of the IRS's systems, because the vast majority of taxpayers, especially in the lower income ones, are ones who all of their income is either W-2 or 1099 already, right? Whether it's a retirement payment, pension, Social Security, or just wage from an income, right? I get a W-2 every year, right? So it's information they have, but the systems are so old that they can't process those documents in enough time to make processing even plausible, right? And so there's no way, there's talk about they should move back the deadlines. And I think they should, but I'm not going to get into why. But I think, yeah, okay, there you go. Look, fund the IRS, right? I've always been of the opinion that you want a well-funded adversary, because for people who are not playing games, that will absolutely do it. All right, Professor Book, he's talking about, the fight. I don't understand this fight. I think it's just a fight to they don't like the fact that the IRS is getting funded, but the bulk of the money, the vast majority of that $87 million is two things. One, a lot of IRS agents are retiring soon. There's a lot of senior ones with a lot of expertise. They want to hire replacements before people leave. And that costs money because you're double hiring for that period. Two, it's technology upgrades. The IRS, as I said, it runs a system on a dead language. It should not be doing that. It should be on a modern system. And anyone who's ever been involved with a large distributed company developing software, it costs a gigantic amount of money to do. And there are going to be cost overruns. And you could say, it should run like private business. I've done a lot of R&D credits at a large financial institutions. They all overran on every single project, no matter what. But that's just, you have to accept it. You say, it's the government. You just don't hear it when private companies do it. So I'm a firm believer. I think that IRS free file should become an IRS thing, because I don't think that companies should be going after that segment, because I think it's too ripe for, these are people who a lot of times don't have advisors, and they can't say, well, should I have paid $50? To me, that's something our tax money should fund, because we're already largely doing it. And then, is it really helpful? What's the long play here? So I don't know. That's my opinion on it. I've been beating the fund the IRS drum for a non-trivial amount of time.
And it's just, everything's so political. And even this week, the politics got into the whole Silicon Valley Bank crash, because now they're going after, it's the accounting firms. It's KPMG who did not.
I'm glad you brought that up, David.
Audit this correctly. And that's gotten political now, right?
Now we can pivot into the Silicon Valley Bank discussion. Before we talk about KPMG, I just wanted to talk about the apps that have really benefited actually from the Silicon Valley Bank collapse. And that is, want to take a guess? It's the digital banks. We're talking about Relay. We're talking about Brex. We're talking about Mercury. Those are the top three that I heard are getting millions, if not billions, in transfers from Silicon Valley Bank depositors. And
I was shocked to see this.
Really?
Actually, because they're all those apps are partnered with a smaller regional bank.
Right.
So isn't that going to cause the exact same upside downness?
Well, so my theory is that these banks make it so easy to set up an account. You can literally do it in 10 minutes if everything goes smoothly, like with Relay, for example, right? And you and I know this, David, because we bank. Our Earmark Media, our podcast, it's
built on Relay.
It's built on Relay, right? We use Relay for that. So what was happening is last week, we're recording on Thursday, March 16th right now, so we're 1 week out from the bank run. Last week on Thursday, startup founders were setting up accounts at Brex, Mercury, and Relay within 10 minutes and transferring millions, if not, well, millions of dollars out of their accounts.
Tens of millions, 60, 70, 80,
It could,
90.
yeah, in aggregate, it was
Hundreds of
millions.
trillions, hundreds of trillions.
It was a lot of money moving out. And that's why this has been called the very first smartphone bank run, because it was a bank run with people on their phones, moving money on their phones, right? You're not tying up the phones or faxes, calling into your bank to wire money out. You're just doing it with the tap of a finger. And that's why it was so easy.
All right.
And it happened so fast.
What this really is, it's not so much like, oh, we made this analysis and this is the better bank, or this is the reason it's safer. They're like, this is the fastest way to get new ACH numbers and transfer funds.
Yeah. Yeah,
Basically,
and do a wire on your phone, right?
Because if you would have walked into a branch of Chase, maybe it would have taken 3 days.
And so these banks, their whole model of making it really easy to sign up worked very well, and so they've benefited a lot. And they've also jumped on the idea of offering expanded FDIC insurance. So over the weekend, all 3 of them spun up sweep programs where you can now participate in this interbank network that will distribute your funds across multiple regional banks. And they're each offering up to $2 million, $2 or $3 million of FDIC insurance now, which is pretty cool. So if you're a startup, you can just have one bank as your interface and have up to $3 million in FDIC insurance on your funds, which it's what we should have all been doing to begin with. But nobody was really thinking about the risk of a bank run because we haven't had a big one since the financial crisis. So I thought that was a bit of positivity, right? I really want to know how many accounts were created in the last week at these digital banks. It's probably going to end up being a huge win for them and for their investors and for their employees.
If these are public companies, you'll find out in about a month, because when they release their their quarterly reports, I'm sure they'll tell you we have 16 quadrillion more accounts, or whatever. They'll let you know.
Actually, so we can't find out. The apps themselves are not public companies, but like David said, the banks that they are built on top of do issue reports. So like ThreadBank, for instance, is what Relay is built on. So we could look to that to see how many new accounts they got potentially. I don't know if they report that. But
when I was building a little database of apps and the ones tied to Silicon Valley, and you start digging into people's footnotes on their websites, a lot of these apps, especially, are tied to banks. Mm-hmm. It's like so-and-so operating as this bank in Utah, so-and-so part of this bank in Nebraska. So I think that the dependencies, I think people are really going to have to step back and start looking at that and understanding, when you have a relationship with an app or a company, what the underlying relationships are.
Ariel says, David hit it on the nose. We're conflating having accounts in many banks with mitigating risk by diversifying which industry and size of the banks. You hit it on the nose, David. Nicely done. So continuing on with SVB, I want to talk about the auditors getting blamed because we all knew it was coming, right? So the Wall Street Journal led the charge. They didn't really blame the auditors, but they certainly implicated them in the collapse with this headline: KPMG gave SVB Signature Bank clean bill of health weeks before collapse. And I think that they bring up a fair point, which is, in the mind of the public, who are not accountants, it just seems crazy that a bank could have a clean bill of health that they could, pass their audit, as we like to say, and then collapse not that long after.
But here's the thing, and I think this is where the public's understanding of what an auditor does, financial auditor, right, not a tax auditor, does, and what they really do, is people think that they take it and then they write this whole thing about, like, will this be a good investment over the next 5 years, right? That's what they're saying. And what they're really saying is that this company has, whatever it is, sufficient liquid resources and a viable business for its immediate short-term needs, right? And what happened with a big part of what happened with them is they tried to raise capital, and because they sold stuff below its fair market, what they thought or how it was booked on their value, they basically had to book down a whole bunch of assets. Mark-to-market accounting it beats both ways, right? People don't like it because, like, oh, they should mark-to-market, assets for a wealth tax, which I think wealth taxes are stupid and unadministrable. But also it'll make, a lot of financial things look way more valuable or way less valuable due to bubbles or relatively quick depressions. You think about, how much money FTX had ostensibly was because of a bubble, right? It was worth more. And then when sort of the smoke cleared, it wasn't there. The assets weren't there. So I think the answer is that the public needs to know what auditors do a lot more. And I think that's a failing of Big Four, especially. I think that's part of their job. I think the AICPA, and I know I'm calling them out again for the 8 trillionth time, but that part of their job is to understand what accountants do and what accountants don't do.
I mean, is the problem more like we live in this emotional society, right? And we've talked about this with GAAP. Nobody uses GAAP financials to make investments. If you did, you wouldn't invest in Tesla. You wouldn't invest in Netflix. You wouldn't invest in Amazon if you used GAAP financials to do this. So if nobody's using the financials, it's kind of the opposite with the audit. They're auditing, and on paper, I think Silicon Valley Bank was okay on paper. But the real risk that they missed was, it's this incestuous set of people only using the bank, and they're all hanging out in this chat room over here. And what happens when they get a fire up their butt
we say market concentration, not incestuous in that one. They like that, but it's funny because you see the number of people who had money there were the same VCs, and all 87 of their investments went through Silicon Valley Bank, and that's it's hard for them to tell because how do you know how much there are? But also when bankers loan money, they don't know if they should invest in the business. They know that they should loan to someone who wants to invest in the business, right? And so they're not making as much of a detailed decision. So every time there's another step in it, should you be doing it? And sometimes, I always say this, markets move in weird ways and things track the same way. I don't know what auditors are supposed to do. Sitting in plain sight. I don't.
So here's can I give you my hot take on this, Matt? So I don't think the auditors are to blame, because the public might expect this, but the way we've set things up, external auditors are not really there to protect investors. We have set up a system where they get paid by the company and they effectively work for management in reality, even though they report to an audit committee. And they're not going to take down a bank by issuing some sort of adverse opinion unless it's like completely obvious, right? They're not going to go out there on a limb and protect investors. They're always going to side with management whenever they can. And then we've got a situation where management can really manipulate their earnings very easily because of the accounting standards we have that allow them to say, we're going to hold this to maturity, or we're going to make this available for sale. And I don't have to recognize losses on investments that I plan to hold to maturity. So I can basically hide that in plain sight in the statement of comprehensive income, but it's not going to hit my earnings. And so very few investors ever look at anything other than, the bottom line or the earnings, right? If it doesn't hit earnings, there's so many adjustments, all that stuff. Like they're not looking at the complicated footnotes. And so that's why Accounting Today published this headline, SVB's balance sheet time bomb was sitting in plain sight. And yes, if you go in, you dig into the footnotes, you look at the statement of comprehensive income, or what do we call it, other comprehensive income, you can see that they had all these, bonds that had lost a ton of value because of rising interest rates. And there were a few investors who spotted this back in January and were tweeting about it, but it was like very few. Raging Capital Ventures did a tweet thread on SVB's earnings and dug into all of this stuff, right? But it didn't hit mainstream consciousness. I hope these guys made a lot of money shorting SVB stock, right? Because they saw it. But it's complicated and it's not easy to figure out. And so I guess what I'm trying to say is that I feel like our accounting standards have gotten complicated and it's very difficult for investors to understand. Even accountants weren't really aware of this until the collapse happened. And so maybe we need to simplify, right? Just like with the tax code, we need to simplify. Perhaps we need to simplify GAAP so that you can't play all these games. I mean, the balance sheet of a bank ought to show whether or not it's solvent. Like, isn't that the whole point of the balance sheet of a bank is like assets minus liabilities, right? You don't want your liabilities to be bigger than your assets when you're putting your money in a bank. But it didn't look like that.
But maybe the way we do audits, or we pay for the audits, is firms that are doing audits are allowed to short sell stocks, right? That will force them to dig in, right, to get the real numbers, and then we're allowing them to do short sales, and that'll actually protect the public. Right? like go in and dig into those numbers and come up with a way, and then you're going to make your money on the short sell. But then they would dig in the same way these short sellers dig in.
Oh man, can you imagine that? if the auditors were allowed to trade on their information?
Only the short sale side, not the upside.
They were allowed to short their own clients?
So they'll let the fraud go for a couple years,
Oh, that's actually true.
and then they'll as they short sell these huge positions.
Well, we don't have to worry about them not telling us about fraud because only 4% of frauds are detected by the external auditors.
I want to know who the 4% who get caught are, right? Like
Really dumb fraudsters, right? It's pretty hard to get caught by like a second-year audit associate. You have to be really stupid.
I found the fraud. It's $1 off.
Yeah. We were just talking with Paul Barnhurst, the host of the FP&A Today podcast last week, and he was talking with us about this as Silicon Valley Bank was collapsing. He was saying that he witnessed auditors being gaslit in his career, and not being able to understand what was being handed to them, and it just being very easy to trick an auditor.
Also, like I've dealt with auditors where, the auditor come to me, I represent the company. God, audit insurance. Ugh, I don't know about that. I have thoughts on that too, but where they would come to me and say, okay, like, we know there's a tax audit going on. Could you give us this?
Yeah.
And so I have to tell them about an audit that relates to like sales tax on the sale of an asset or an R&D credit audit or a billion other things. And they say, okay, thank you. And then I don't hear back. And like, I don't mean to sound rude, but like, I have more than a decade doing this and you have the 6 minutes I just gave you. How much can you dig in? But you know what the part of the problem is?
Yeah.
That audits are the amount for public companies, the audit, the fee is public. And so if it's too high, there's an incentive for someone else to come in and undercut them by $100,000.
Yeah.
So they're basically at the lowest margin they can be to make a profit. They have to move every 10 years. People have to rotate every so often. So you have a combination where sometimes you just don't have expertise on it that you need, and they're forced to low margin it. So it's hard to get people to stay. Audit tax is a turnover problem, but audit has a much bigger one. Plus also you go from an auditor to becoming a controller at a fund, right? Better pay, better hours, better job, better, looks better on your LinkedIn profile.
Yeah.
Audit insurance. Huh.
So Keith here has commented, Ron Baker says that insurance companies should sell audit insurance to companies and be the ones that hire the auditors. So the idea here, and I've heard Ron speak about this, and I think this is a really intriguing idea, is that every public company is required to purchase audit insurance, right? Or financial statement insurance. And this is insurance that, backstops the accuracy of the financial statements. And then the insurance companies would go out and hire the auditors to ensure compliance, to ensure that these companies are actually reporting accurate numbers. I like that because it creates an incentive for the auditors to find what's wrong, because they're working for these insurance companies, and the insurance companies are incentivized, if they're issuing financial statement insurance, to have the numbers be accurate, because the investors will sue if they are not. I think this is certainly a better alignment of interests than the current situation, which is auditors are hired by the companies they audit. And so they, like in the case of SVB, the auditors are never going to issue a going concern warning against a bank because it will kill the bank. And then they lose their client, right?
By the time they issue a going concern warning, the FDIC has already taken them over.
Yeah.
So I'll tell you what the risk is. So in deals, there's what's called rep and warranty insurance. So there's insurance that everything is correct. And if it's not, the company doesn't pay, the seller doesn't pay, you buy insurance on it. It's the same idea. And what happens is it becomes commoditized, and so it gets priced, and that's it. I think you would get people who would really look, they'd really want to find, but then it's like a tax audit again, but in financial, and it's the problem is it's generally accepted accounting practices. There's no rule book, there's no it has to be this, there's mush in it, which is fine, there should be, it shouldn't be the same, it's do that. I just worry that's going to create over aggressive, and you're going to get people whose job it is to go after them, and they're going to really be tough. And then who has to make the decision, right? Conceptually, I just worry it'll swing the pendulum too far, and audits will become significantly more expensive because the insurance will be much more expensive.
Yeah. Well, right now the price is rock bottom, right? It's basically as cheap as it can be because it's a commodity. Every audit opinion is the same as every other audit opinion, at least among the big four. and then all the regional firms, right? They're all the same.
They hire the same partners, the same senior managers. It's
right.
all they're the same.
And that
They have best
ultimately,
practice.
when we talk about like the problem of low salaries for accounting grads when they go into auditing jobs, right? And 2/3 of graduates go into audit. The reason the salaries are so low is because of what we just talked about, that audit's commoditized, the prices are driven down to rock bottom, as low as they can be, where the audit partner still makes enough money, right? For them, whatever that is.
It's a business. It should make money.
Yeah, of course. But the only way for the audit partner to make more money is to keep the salaries as low as possible, right? Do the minimum amount of work to get through a PCAOB inspection and pay your auditors as little as possible. So you're hiring the least experienced people who know the least about how to actually audit, and you're doing the minimum amount to check all the boxes to satisfy your professional liability insurance and meet PCAOB inspections. So this is why audits have very low value, because they don't really catch that much.
It might get lower because CLA, did you see this? They just launched paid high school accounting internships.
Yeah, I saw
Paid
that.
high school accounting internships, so I can have a high school
Now,
kid auditing.
The headline makes it seem something that it's not.
Okay.
Basically, they partnered with Future Business Leaders of America, and it looks like if you read it, they're not actually doing any internship work. They're going to do client service simulations, social media development.
Oh, I like
and they're
that.
going to make presentations and compete in competitions. So it's like, what are you paying them to actually do? Like, you're not paying them to actually do work to where they actually get some experience. Like, it would be great. Like, hey, you're going to shadow somebody that's going to, in the cash practice for 2.5 months and reconcile QuickBooks. It doesn't feel like it's that. It's basically
Well, you want them to have
simulations.
you want them to have a really great internship experience so that then they take the job. Right? The bait and switch. Is that what this is?
It might be.
No, I'm being overly harsh, I'm sure. I hope if anyone from CLA is listening, I apologize. That's just my hot take. Not accurate. We're not real journalists here, right, David?
Not this week.
Not this week. Okay, got it.
Did you want to jump into SPAP news before we wrap up, or?
Yeah. What do you got?
So one of these things is it's short. We have something from Zoho. So Zoho had a blog post of their 10 most installed Zoho CRM extensions of 2022.
Mm-hmm.
And why it caught my eye, Blake, is because you've been a big kick on this as far as like you should communicate with your clients the way they want. If they want to use SMS, text back and forth with your clients. 5 of the top 10 apps installed to Zoho CRM, are you ready? SMS Magic, WhatsApp for the web, SMS for Zoho CRM by Message Media, WebNexus WhatsApp chat for Zoho CRM, and Click Send SMS. 5 of the 10 top add-ons to Zoho CRM are ways to do instant messaging with your clients.
Amazing. And that's across all Zoho.
All Zoho
Yeah.
customers.
So businesses on Zoho are really using those kind of apps to connect with their CRM.
And to chat with their customers.
Right,
Who
'cause
the customers obviously want to be interacting that way.
That's what they want. They want the convenience of being able to text. They don't want to do email. Yeah. But it's hard, right? Because if you're not tech savvy, if you don't have a firm that's hooked up this way, then your only option is to give your clients your cell phone number, which is a total do not ever do that, right? I made that mistake 10 years ago and I'm still paying for it. So these apps are really cool because you can give your clients a phone number and then they can text with you, and it doesn't go to your personal phone. It goes to your desktop computer, so you can only answer them when you're actually working. I don't know.
Matt, do you text with your clients, Matt?
Oh.
Do you have?
No. It's the problem is attorneys have to keep a lot of documentation for a while and having them in multiple places. The answer is email only for me. I mean, you can call me obviously, but really email's the best. Plus, most of my clients, the answers are more significant than a quick text would really work. So it's just not.
And the email takes the full 8 minutes for you to bill, but a text
6.
reply isn't long enough for you to document and bill.
You bill in 1/10 of an hour, which is 6 minutes.
6 minutes, okay. Yeah,
Yeah.
and text is a little bit faster than that. I get it. Okay.
Well,
Honestly, I probably type faster than I text. The text is using your thumbs. This one, I got all these digits.
So Matt, what's your charge code for this episode?
This is going to probably be a marketing, non-client specific marketing.
Got it. So speaking of the accounting talent shortage, did we talk about that yet? this episode? I feel like it's a requirement. Here's a story I saw in Accounting Today. Lack of accountants puts cities' credit ratings at risk. So there's a real impact happening here. Municipalities across the U.S. are at risk of having their credit ratings downgraded or withdrawn by S&P Global Ratings because staffing shortages have delayed financial disclosure documents. S&P has placed 149 long-term underlying and program ratings on a negative credit watch this year because the ratings company hasn't received the 2021 financial statements from the issuers. That's the most since at least 2018 and materially higher than the prior 5-year average of 95 such moves, according to S&P S&P data, not David. So this is why getting more CPAs into the pipeline is critical. There's not a lot of urgency from our leaders in the accounting profession. But if we don't do something now to make up that 17% that quit over the last few years, we're going to have real economic consequences. And in this case, it's for cities.
And this goes back to 2 weeks ago when we had Dr. Josh on from Troy State, right?
Josh McGowan, yep.
And he had that hypothetical, like, okay, I'm Mr. State Representative, and you come crying to me about changing the 150-hour rule, the 120-hour rule, like why I should do it. Because it truly impacts you. This is why.
This is why. This, I think, is why. Is because the problem is so urgent that we need to get more people into the profession that, that'll actually make it happen.
Because they're dealing with the pain of that. Yeah.
Yeah. I don't know, Matt. There's a shortage of is there a shortage of attorneys, or did they produce like enough of you guys?
There's not. There probably. I mean, tax always has a need. Certain areas are much more flashy, I guess might be the word, or not as technically complex. That sounds arrogant, and I know I apologize for that, but no, it's the truth. Tax, requires a certain. You have to want. I tell people who think about taxes, you have to want to do tax. If you don't enjoy it, it's going to burn you out very hard and fast. So it's tough. And a lot of people start in tax and make it a year and then don't want to do it anymore. So, but the people who stay. So are there shortages? Also, there's 180 or so attorneys, law schools out there that are producing anywhere from about 150 to 700 or 800 attorneys a year, right? The vast majority of people pass the bar, or they work at jobs that don't require it. So, and there don't need to be as many attorneys as accountants. And I think there's just more jobs that accountants fill than lawyers. So I think that really makes it harder. I think the 150 hours is tough. That extra 30 hours it's not like you need to go to school for accounting for 30 hours. You can take whatever. That never made sense to me.
Yeah. Law school has a specific objective and value. You get that law degree at the end, but the 150 doesn't necessarily. And it was interesting, David. I was re-listening to our interview with Ken Bishop of NASBA, the president of NASBA that we just dropped into the feed yesterday or the day before. And I highly recommend everyone go listen to that. I've been thinking about that a lot, that the defense of the 150 always seems to revolve around the value of the Masters of Accountancy. And that is one way to satisfy the 150 requirement, is to go get that 1-year master's. And I'm sure there are many people who benefit greatly from that. And they get great jobs at the Big Four. That's where they tend to go, and they have fantastic careers. But that's only 20,000 people a year that do that. And we need way more accountants than that. And those accountants who don't go to those master's programs are the ones having to hassle for those extra 30 hours that they really don't need to go be an accountant at a city government. You don't need the master's degree to do that. It's just way overkill. And I think that's what I heard you say, Matt, is we need a lot more accountants than we need lawyers. And so, by trying to make accounting into, competitive, I still think it's kind of pathetic to only add a year if you want to be like lawyers, right? But to try and compare it to that it's not the same.
I think that focus needs to be on what actually makes accountants better. And I think it's the same thing that I say that makes lawyers better. I don't know if the best lawyers are the ones who necessarily went to the best law school or whatever. What makes you a good at really any profession is that you put in effort, you try, you focus on it, and you pick up concepts and you improve over time. And I think that is more important than getting an extra 30 hours. And maybe the answer is you more formalize the requirements to become a CPA in terms of experience, right?
Yeah.
Maybe it becomes the CPA splits into something more similar to the EA for tax, and something for audit, right? That's that split that has to happen, because I think there are fewer and fewer jobs that are generalists anymore. And I think that's what makes it hard, because I think accounting still wants to be a generalist and a specialist at the same time. And I don't mean to dig on it, but I don't know how you do that. Doctors aren't generalists anymore. There's very few. They're specialists, and every profession becomes more and more specialized. Just how the world's working because of complexity.
What's strange about accounting is how we all start out, like 2/3 of the accounting profession starts out in audit, but then within like 2 or 3 years, none of them are, like very few of them are doing it anymore. Now they go off and they do other things. It's a very, very different setup that we've got, just by the nature of how these bigger firms work and how the whole pipeline works from college into the firms and then out into industry.
I also think the first 2 years of any job out of college is kind of awful. You're beyond the low person on the totem pole, and I think that's really a challenge. And I think they look at the next step and they're like, boy, do I really want to be a senior? Do I really want to be a manager? Does that look any better? And the answer is maybe not. And that's why a lot of people leave. And I think they have to focus on what the job is, what you're trying to accomplish, and create a pipeline that gets people to the next step more than how it is.
Matt, we're coming up at the top of the hour. Thank you so much for spending this time with us. I've really enjoyed it. David, where can our listeners catch you online?
I'm on all the socials, just at David Leary.
And I am at Blake T. Oliver. Thank you, everyone who has joined us live. You can follow us on YouTube. Subscribe to our channel. You'll get notified when we are live, and you can interact with us, chat with us, let us know what you think. We are here at randomly different times every week, it seems. So you just have to subscribe and hope you catch us. We are cloudaccountingpodcast.com, and you can email us, cloudaccountingpodcast@earmarkcpe.com. All right, Matt, great chatting with you. Hope to see you around here soon.
Thank you. Take care.